Tesla stock is showing a triangle breakout pattern. Traders are focused on key price levels that could trigger a massive move. In this video, I'll break down the technical chart and the long-term growth drivers, and then I'll show you the exact trades that I'm putting on and how you can profit. Should be a fun video for you here today. One thing I ask, one thing only, smash that like button down below. You're certainly welcome to subscribe as well. We're at an all-time high for subscribers, so thank you very much, and let's jump into it. Tesla is capturing significant attention from investors and traders in August due to a combination of its pivotal market position and intriguing technical price movements. As one of the leading EV manufacturers globally, Tesla remains at the forefront of innovation with key growth drivers in autonomous driving technology, robotics, and AI, all which contribute to its long-term potential. However, recent challenges, including the loss of U.S. electric vehicle tax credits and intensifying competition from European and Chinese automakers, have created near-term uncertainty. From a technical perspective, Tesla's stock price is currently forming a classic symmetrical triangle pattern, an arrangement where price action converges between two trend lines, signaling a buildup of pressure ahead of a potential significant breakout or breakdown. This pattern has heightened trader interest as the stock hovers near critical price levels where a decisive move could take place. Despite recent volatility and some bearish sentiment fueled by earnings declines and macro pressures, the setup suggests a moment of possible high momentum that traders closely watch in August. This convergence of innovative growth prospects with a suspenseful technical setup makes Tesla a particularly hot stock right now, attracting both long-term investors and short-term traders poised for a potential breakout move. Let's break down Tesla's long-term growth catalyst. Tesla's long-term growth potential is fueled by several key catalysts that reinforce its leadership and innovation footprint in EVs, autonomous driving, and energy solutions. Tesla continues to dominate the EV market in the U.S. Despite some recent challenges and a slight dip in sales volume in early 2025, Tesla still holds a commanding market share of about 44% of all EV sales in the U.S. as of Q2. Its Model Y and Model 3 remain the top-selling EVs, accounting for 43% of all U.S. EV sales. Tesla's push in full self-driving technology remains a major growth driver. Leveraging vast vehicle data and advanced AI, the company aims to transition from hardware-focused EV sales to software and services, notably with Robotaxi networks and autonomous ride services anticipated to generate recurring high-margin revenue streams in the future. Continued improvements and regulatory approval process in the space could be monumental catalyst. Tesla is expanding beyond vehicles into sustainable energy products such as solar panels, solar roofs, and energy storage systems, including Powerwall and Megapack. These initiatives not only diversify revenue sources but align with broader industry and government trends towards decarbonization and grid modernization. Tesla's Robotaxi business is set to be a major growth driver, with revenues projected to reach about $75 billion by 2030, around 45% of its automotive sales, making a shift from traditional EV sales to high-margin autonomous ride-hailing services. Launched in pilot form in Austin in 2025, Tesla's approach leverages its existing full self-driving enabled fleet, allowing millions of vehicles to become robotaxis via software updates rather than costly new builds. With strong AI capabilities, manufacturing scale, and a massive market opportunity, robotaxis could transform Tesla into a recurring revenue mobility platform, though success will depend on overcoming regulatory, technical, and competitive hurdles. Tesla's leadership in EVs, autonomous technology, energy solutions, and humanoid robots, yeah, they're coming, positions Tesla for long-term upside. I'm going to show you right now what I'm doing, the trades I'm putting on the option trading platform. All right, guys, I'm going to show you two of my favorite option trading strategies right now. We're on the Tastytrade option trading platform Great platform as well as brokerage. There's a link down below and benefits if you go through my link, and it's the one that I use all the time. So we're going to punch in Tesla, TSLA right here in the upper left, and we're on the trade page, and we see the different option chains. Now the first one that we're going to do is a poor man's covered call. So we're going to buy a long-term leaps. So I'm going to go out right now to the June, 310 days out, June option chain, and click on that to open it up. And then I'm going to buy the 320 call option. Calls are on the left, puts are on the right, and you can see ask buy right here, and 320 strike, and we can buy that for $79.90. So that is $7,990 since one option contract controls 100 shares of stock. Now, mid price is $79.70. Now, what I like about the Tasty Trade platform, you can go to curve mode right here and analysis, and then you can see the profit zone. So as the stock price moves up, you make money just like owning the 100 shares of stock outright. So if we get up into this, 450 range, look at our P&L at expiration. It's over $5,000, $54.32 right here when the stock price is at 450. So unbelievable. Almost a 100x return on that if it gets up to that level. That's if, but I'm confident it's headed there. It's just a matter of when. So here's the curve mode. Now, one thing that we want to consider as well. So if we were to buy that 100 shares of stock outright, it would be $337 per share times 100. That's $33,730. So 33K versus under 8K. Big difference, less than 20% of the price to control the same 100 shares. So we'll go back to the table mode here. Let's close that up. Now this is the beauty of the poor man's covered call. It's like a covered call, only we're selling a call, a short-term call against our long-term deep in the money call. Now we're going to go to the September option chain and open that up. You can see I've already got a put spread on, but we're going to buy the call out of the money. So we can go out here we can go all the way to the 360 or actually we'll go to 355 and collect $1,360. So again, that's $1,360. Now we're going to sell it. So that is deposited in our account when we place this trade. But since we're buying and spending $7,970 for the call, it's going to lower the price by that amount of money. So 355, we're going to click on the buy right here and watch the price, the $79.70, come down. There you go, $65.87. Now we've got this on for $6,585, and we hit review and send and place the trade. And that's how you place a poor man's covered call. And we've still got upside all the way to the 355 from 337 on the Leaps contract, and then we still collect that $1,350 every month. Now we can do this, roll every month. We can collect that short-term call option premium. So over $1,000 every month, $1,355. We're going to own and control this in less than 6 months. We're going to cover this $65.90 that we're buying it with right now. So in less than 6 months, we can control that 100 shares of stock for free, and then continue to sell calls and collect that $1,000 a month. So that's why I love this strategy. You hit review and send and place the trade. Now, one other strategy that I want to show you is the put credit spread that I have on right now. So it doesn't use as much capital. It basically uses about $1,000 because that's the width of the spread that we're going to do. So we're going to go to the September. So we're going to go, I like to go 30 to 45 days, closest to 45 days to expiration. So that would put us in the September regular option chain at 38 days. We'll open that up, and then we're going to sell a put spread. So puts are on the right. So we're going to sell the 330 right here by clicking on sell, and then buy the 320 as protection. Now look, we'll immediately collect $410 for doing that. $4.10 times 100 shares. And our, if we go to the curve mode, you can see right here, we're profitable as long as the stock stays above this 330, and it's at 337 right now, so it could even move down a little. And we still keep this $410 that we collect as soon as we hit review and send. So that's the beauty of this. We're even allowing for it to move down, and we can still profit. And our profit, our max profit's 410. Our max loss is the $10 width of the strike minus the 410. And you can see right here, $590 is our max loss. So there, with this chart setup, like we covered, the triangle pattern, to me, this is a no-brainer trade, and so is the poor man's covered call. We hit review and send and place the trade. All right, guys, be sure and download the free options workshop in the link below. Like and subscribe. Let me know in the comments below exactly how you're trading Tesla, and watch this next video.